Okay, here we go. Hello, everybody, and welcome to this week's edition of Selfwealth Live, the technical analysis edition. My name is Roger. I work at Selfwealth. Obviously, I've been there for the last 4 years. It's been a great journey, especially over the last 2 years with my man on the right, the expert in technical analysis and trading and whatnot. And that's Jason McIntosh from Motion Trader. It's been a great 2 years, Jace. I just have to say. I just want to welcome everybody on the other side of the line as well. We are now into December of 2025, and what a year it's been. Hey, Jace.
Yeah, g'day, Rog. Good to be back. Good to be back to talk about some stock charts. And yeah, look, it's been a great 2 years doing this show, our weekly analysis of the markets, and interesting times at the moment. So I've got a few charts we'll go through, and should be looking forward to the viewer stocks too. That's always interesting.
Exactly. Yeah, I noticed maybe there's a few divergences between markets happening at the moment, Joe. So maybe we can talk a little bit about that coming up. Okay, so if you didn't already know, what we do today is we go through the three major markets. That's the Australian market, the US market, and the Hong Kong market. And they're the markets that we offer at Selfwealth. And then if there's any general viewer questions, we can try and answer them within the time that we have. And obviously the bigger part of the show is all about your tickers. Let's have a look at least one of your tickers. So feel free to pop them through in the comments. It's great to have you all here once again. But before we go ahead with anything, Jace, let's have a look at the disclaimer, please.
Yeah, quick word about that. So everything today, general commentary only, no personal advice in any of this. And the disclaimer that we pop up each week goes through that. I'm not part of Selfwealth. My business is Motion Trader, so my details are at the top with licensing, etc. And beneath there, the Selfwealth disclaimer, licensing, general commentary, all that important information is in there.
Fantastic. Thanks, Jace. All right. So when I say, obviously, divergences, I don't mean huge divergences, but normally our Australian market goes pretty hand in hand with the American one. But I just feel like we're lagging behind a little bit, Jace. What do you think?
Yeah, look, that's very much been the case over the last couple of weeks. US market has rebounded strongly and up near all-time highs. Aussie market not so much, and but it's an interesting divergence even within the local market, and I will discuss that as we get into the charts in a moment.
Fantastic. Actually, when looking at the charts yesterday, also on the US market, I noticed a slight divergence between the Russell it's the Russell 2000 is going higher than the general S&P 500, which is good as we talk a lot about that broad market participation. It's funny that within a few weeks, we're going from negative news to positive news again. It's such a up and down time, but I'm looking forward to seeing these charts. Jace, let's start with that Aussie market, right? So
yeah, okay. So let's get into it, and let's start with our ASX 200. And so last week we were speaking about how we had a breakdown below key support around 8,600, and also talked about how the moving averages were starting to roll over. And we discussed how that wasn't a bearish signal, but rather an orange warning flag, which meant be alert, know where your exits are, but don't panic. And I think that key message still stands. The situation last week and still is. It's about what's the next rebound look like? Is it going to be could it be like a V-shaped recovery like we saw back in April, where the market bottomed then straight back up? A similar situation on a smaller scale in August last year, sell off below the averages, then that V-shaped recovery back up. Could it be like that, or might it be more of a shallow bounce? A shallow bounce that quickly stalls, and so why is the type of rebound so important? Well, a V-shaped recovery, which goes quickly back up above the moving averages, that's a sign that the dip is being bought and being bought strongly. While a shallow bounce that gets stuck, well, that's a sign that the rally is being sold. And of course, bull markets are built on the former. They're built on dips being bought and prices moving upwards. I think it's still too early to say what what we have at the moment. But so far, the rally is disproportionately shallow relative to the previous or the earlier sell-off, and it is starting to stall around resistance around 8,600. You can see that takes previous all-time high, another peak from mid-year, and yeah, there's been some technical work around that area. I think the danger here is that the ASX 200 gets stuck around current levels and doesn't have a convincing rally back up through the moving averages. So say we were to get price action like such, where the market just gets stuck beneath resistance and moving averages continue to roll over, that would be the sign. That would be a sign that selling is capping the rally. And when selling caps rallies below declining moving averages, then the risk of a significant breakdown and a bearish trend increases. So from this type of sideways inability to rally pattern, that's when you can get the breakdowns. Now, this hasn't happened yet, and it may not. This is just like going through something we need to be aware of. I think this is a sort of structure that if you can identify, it does help you stay ahead of the game. So, look, as I say, it hasn't happened yet. It's just something to be aware of. It's about trying to identify that structural shift from where the dips are being bought to where the rallies are being sold. The biggest drag on the ASX 200 is currently the financials. And a quick look at the financials. And you can see the sort of price action I just described, where you get the hard down, you get the muted rally, inability to really buy the dip, and then you get prices selling again. That's sort of the price action we don't want to see develop in the ASX 200. But then this is where the divergence, which we spoke about in the intro, Rog, comes in. So the financials is looking weak, but then you come across to the materials, and this is where the big miners live, and it's a very different situation. Not only are the moving averages rising, and price is above those moving averages, the materials is also breaking out of a 3-year range. You can see this big 3-year range. There's this big 3-year range on the chart, and prices are currently in the process of breaking out from it. So very different situation to the financials. Prices are currently consolidating along. So we've got these rising moving averages. We've got a 50-day and 100-day moving average, and we've currently got this consolidation along the moving averages. And I think the odds favour new highs in the coming months. I think the materials can continue to move higher from here. And without a downturn in materials, I think it's unlikely the ASX 200 enters a lengthy decline. So I think that's a supporting factor for the market. So financials struggling, but materials strong. At this point, I'm treating this pullback as a simply that, a pullback within an upward trend. I think it's a sort of fear-inducing pullback we've seen many times before. You can just see them. Look back at the chart. These dips from above moving averages to below. Seen these many times over the years, particularly over the last couple of years. Of course, a bigger one in April. I think we should expect more consolidation in the near term. More consolidation in the near term, but I don't think we should be panicking to exit the market. I've sold a few stocks over the last week or two. Some are at a profit, a modest profit. Some at a large profit. Others were at a loss, just cutting a losing position relatively early. But I've also bought some stocks as well when I've had signals to do so. So basically, I've been managing this fall by sticking to my plan. And I think that's the thing with a good plan. We design it when everything's calm, everything's going well, and we're clear-headed. And then when things get difficult, like they are now, like we saw back in March, April, we can then follow the plan and we avoid the emotional decision-making that I think catches so many people out.
Yeah, I totally agree. I actually cleared out a few losing stocks yesterday as well, being the first of the month, and that's part of my plan. Like I mean, obviously, a lot of my plan is based on what you taught, Jason. But for me, it's kind of like the ability to be able to just review your portfolio at least once a month and not just those losing stocks, and not be on them every day unless they really come close to your stop loss, but just reviewing them once a month, right? And clearing that portfolio and having that capital free, ready for the new ones to come in. So I think having your own process is important as well, right? Not just following someone blind, not just following someone to the T all the time.
Yeah, look, I think having that plan, reviewing your portfolio, I think it's always really important. Knowing where your exits are, and like even if you're reviewing it once a month, but knowing where your exits are, so you have alerts if a stock comes down to your exit between reviews. Nothing worse than coming back a month later and going, oh, I didn't realize that happened at the beginning of the month, and now things are a lot worse. So if you have monthly reviews, that's all good, but have alerts in place so your attention is drawn to something that might go amiss between reviews. And I think it's that vigilance to risk, which which increases our potential to do well over time.
Yeah, I think the other thing I've noticed for me over time, and if you don't have everything programmed, right, I could be sitting on losers for more than, like you've said, 3 months. My rule, I think 3 months or 2 months. I can't remember, that you would hold on to a loser before you clear it out, even if it hadn't hit your stop loss. For me, it's 3 months anyway, and I have a tendency to forget about it and just leave it more than 3 months, right? So this is why I've sort of put this process in place that once a month, if it's a losing, I've just got to make sure that I haven't held it for more than 3 months, right? So as a rule of thumb. But they're my rules. Now let's have a look at the US markets then, Jace. Let's have a look.
Okay, S&P 500. It's interesting, Roger, I think, to reflect on how negative many people were just a week ago. Just going back a week, how negative a lot of people got. Some people were looking for a big breakdown, and there were signs there was a bit of panic starting to emerge. We certainly saw that in some of the ASX stocks. But here we are a week later, and there's been a strong rally off the 100-day moving average. So this blue one is a 100-day moving average, and prices are now within about 1.5% of a new all-time high. As I said last week, I think try not to get swept up in other people's fear. Know where your exit levels are, as we just discussed. Follow your plan and make rational, unemotional decisions. I think that's how we see off these periods of uncertainty and manage our risk. So, is this rally off the 100-day moving average? Is it the real thing? As it stands, I think the uptrend that's been in place since back here in April, I think this uptrend is, I think it's still intact. All we have at this point is a pullback from an all-time high to the 100-day moving average. You can see similar examples in say we go back to look at April last year. There was an all-time high, pull back to the 100-day moving average, and then things started to rally again. Now, whether this rebound leads to something like last April, well, of course we don't know that. But I think the point is at this stage, the trend hasn't changed. Hasn't changed from being bullish to bearish. This remains an upward trend. The biggest concern about the recent trend, just over the last few months, this is something we've been discussing. One of the biggest concerns has been the persistent fall in participation. So that means most of the market hasn't been running. It's really just been the what they call the Magnificent Seven. So the Nvidias and the Microsofts, Alphabets, which is Google, of course, and the like. It's been like a big cap stock rally holding the market together. And of course, healthy bull markets require broad participation. It's not just about a handful of stocks. You want the whole market doing well. And so that's been one of the issues just over the last few months. Let's jump to the equal weight now, the S&P 500 on an equal weight basis. I'll show you what's just recently happened there. And so last week I was talking about this breakdown. So you might remember we talked about there's been this 2 month trading range. And last week prices broke to the to the downside of the range. So that was a concerning sign. And I said, look, this is a sign of technical weakness, something we shouldn't ignore. But look what's happened now. The breakdown hasn't attracted follow through momentum, and we've got this strong rally back towards the upper end of the range. We can now say, I think we can now say that this breakdown was indeed a false break, and false breaks to the downside, well, they're often bullish signals. So what a false break tells us is that the selling pressure was quickly exhausted and the dip was strongly bought. Hence, you can see that that you've got that V-shaped recovery, the sharp down, but then equally as sharp back up. I think the rally in the equal weight, I think, is also a sign of broad participation returning to the US market. So this week's rally isn't just about Nvidia, it's not just about Meta, not just about Microsoft. It's to get the equal weight to have a strong rally, you need to have broad participation, and I think that's what we generally need to see the see prices move higher in the coming weeks. Just back to the S&P 500 quickly. As it stands, I think we've got a pullback. We've got a pullback within an uptrend. There are also signs of increasing participation, which is positive, what we saw in the equal weight. As I said earlier, don't get swept up in other people's fear. Have a plan, apply it when the markets are good, but I think especially apply it when the markets are tough and they get in a little bit and some emotion creeps into things because no one likes seeing their stocks go down, but that's where the discipline of following your plan really comes in. It's about, I think, sidelining our emotions and managing risk. And if we can do that well, then these pullbacks become a lot more tolerable. And if they turn into something else, well, we've got that plan to respond to that as well.
Yeah. All right. So that's better news technically from a US perspective, which is great. What about the Hong Kong market?
Okay, so over to the Hang Seng. Well, it's been pretty quiet this week. Not a great deal of movement at all. We're continuing to see a trading range develop. I can just highlight that. This is a trading range which has been developing over the last couple of months. And it also coincides with prices trading along the moving averages, which is a typical consolidation type of price action that we see. Near term, I think we're probably in for more consolidation, but this broader uptrend remains in place, and I think the odds favour an eventual break to the top side. Over in China, just quickly coming over to China. And prices have been rallying off the 100-day moving average. That's our blue moving average is 100. The red one is a 50. So prices have been rallying off that 100-day moving average over the last week. So far, the signs are that the dip is being bought. I think it could be a case of more consolidation in the near term, just like I suggested in the Hang Seng. But this underlying trend remains in place. This isn't a topping pattern or topping phase at this stage. It looks to me like it's a pausing phase prior to further gains within the trend.
Okay, fantastic. That sounds positive for those markets. I know we're probably going to get it asked at some point, but if you want to do you want to just brief over gold/silver? Obviously, silver's had a bit of a tear the weight a little bit, so it'd be nice to know your thoughts on that as well.
Yeah, so my big review of gold is always in the my Friday strategy session. So viewers should definitely come across and check that out because we go through this in a lot of depth. I spent about 20 minutes talking about gold, so of course we can't do 20 minutes now talking about it. But just in brief, look, prices have been rallying off the moving averages. I was saying on Friday that it looks like maybe we do see gold setting itself up for a new all-time high. The concern for me with gold is just when we step back and we look at it on a weekly chart, how big this rally's been. And even if prices were to touch to a new high, I still think there's a high possibility that we do get a longer consolidation. It is a long way off the 50-week moving average. So it's gold's. I'm long gold. I've got gold stocks, but mostly these are core positions which I've held for a long time. I'm happy to hold them. I've got some motion trader gold stocks. I've got a trailing stop on, but I also have lightened some of my discretionary gold positions I took on in the last couple of months. And I think it's all. The thing is with things like gold and silver, it's great when prices are rising, but people can sometimes get overconfident and overexcited and just take on too much risk, and then prices pull back. And these pullbacks, like you look at these pullbacks on a weekly chart, they don't look like they don't look like a big deal. But at the time, if you're living through these pullbacks in gold, they tend to be quite volatile and unpleasant. So having too much risk exposure, it can be an issue. So yeah, my feeling is that the upside is maybe capped in the near term. Maybe there's some more we can push to a new high, but yeah, I just get a feel this has been an extended run, which probably does need time to consolidate. Looking at silver, silver is going to be correlated to gold, but it's this like I've got a long position in a silver ETF, and that's great. I've held it, the whole. I bought it back in April. It's been a great run. I've seen off some pullbacks, but I'm not getting excited and just going, okay, let's double up or let's keep adding. It's like I know there's going to be a bigger consolidation at some point. I don't want to be continuing to buy the whole way up. It's like let a good profit run, but don't forget that big runs also lead to big consolidations. I do think there's a risk we do get the that bigger consolidation not too far into the future.
Fair enough. All right, let's, as we did touch on this before, and I didn't see this question in there, but let's just quickly touch on, Rob just wants to know a bit of a refresher on how you approach your time stops.
It's I use 60 trading days, which is essentially 3 months. 60 is not a special number. It could be 50, it could be 70, it could be 81, whatever it may be. But it's just like just having a fixed point where I say, look, it's not working out. I'm going to I'll just sell. We could just use this chart as an example. Say like we look at this could be a stock price or a commodity price, could be anything. So let's say, look, you can see like prices have been consolidating along the moving averages. There's a breakout. So let's just say prices have broken out here. But on this occasion, they rally a bit, then they stall and they start to come back. Like I might say I've got a trailing stop. We won't worry about the percentages for now, but just to say I've got a trail. There's my trailing stop. There's my entry point. But then it's stuck in this range. It's not really doing much. So I would say I'd give it 60 trading days, which comes to here. So there's my time stop. So when the price hits the time stop, if it's below my entry point, there's my entry point. I'm in the red. Hasn't hit my stop loss, but I've given it 60 days. It's in the red. I'd just say, okay, it's had enough time. I'll just sell this one, take the capital out, do something else. If it comes good later on, I can get back in. As it turned out, there was probably another 6 months of consolidation, and then there's a nice consolidation along the averages. Prices start to break out. There's another opportunity to get back in on that occasion. Then the market runs. So it's just about not having capital tied up, open ended. Yes, we might have a stop loss, but stocks sometimes they fall below their entry price and they just meander for months, sometimes years. They don't hit a stop loss, they don't rally. So it's just like having that point of saying, okay, it's had a bit of time. I'll move this one out, come into something else, and maybe look at it later. It means I've got a lower average loss than if I waited for my stop loss to trigger, but I've got a lower win rate because there's more turnover. So that's one of the things to remember if you're using a time exit on losing trades. It tends to lower the win rate, but also reduce the average loss, depending on how you're applying it all. But that would be how it would work. And I find it works well for me because I get to have a crack at new opportunities, and some of them might do well. But it's if you like a less active approach, then maybe it's not for you. It all depends what works.
Yeah, I mean, as I've heard you over the years, Jason, I've certainly gotten used to getting rid of losing trades that haven't hit my stop loss yet, and getting over the fact that I have to be right, and being less right, but having the ones that are the right, are going the right way, the winners being a lot bigger, and covering all those losers, right? So it is a big psychological thing to be able to go, hey, I have less of a win rate, so I'm not going to say I win 8 out of 10 trades. It's more like the other way around. Those few that are going really well in my portfolio are giving me all the gains, right? So yeah, it's a great approach to have in my eyes, and what you've taught me. So thanks.
Yeah, I think I think a lot of people focus on the wrong metric. They focus on their win rate, and I think a lot of that comes down to how a lot of services advertise their products. They talk about we're right 8 out of 10 times or 90% win rates, and I see all sorts of misfocused statements out there. And it's not so much about how often you win; it's about how much you make when you win, and how much you lose when you lose. So you can win 90% of the time. You could win 90% of the time, but you only make 5% on each success, and you lose 10% of the time. But when you're wrong, you lose 60% because you hold on too long. So a 90% win rate could be a complete disaster if you're not managing your losses well, and you're taking short, quick small profits. So yeah, you need a wider parameter than just a win rate. And for me, it's about focusing on maximizing my gains, minimizing my losses, not getting too hung up about what the actual win rate is. I think it's the wrong number to be focusing on.
Yeah. All right, fantastic. Let's get on to some stocks then, shall we? Starting with good morning, Astro. Let's have a look. It's good afternoon for us, but let's have a look at SRG, please.
Trend is up. Nice moving averages, having a consolidation. I like how it's trading today. How we've got the open traded lower. It's on its highs for the day. Like, it looks like the dips are being bought. There's that tendency to want to buy this stock, and the price being supported. I'd continue holding if I was in it. I think it's a harder question about, do I want to buy it. I'd probably balk at buying this stock just because it's had such a big run. But yeah, look, I'd be very happy staying on this stock. Are you there, Rog? You're dropping out.
Fantastic. Good morning. Can we have a look at ORG? Are you there?
Yeah. ORG. Well, there is some vulnerability coming into the share price in that we're getting consolidation below moving averages, which are starting to decline. So it's that sort of situation we discussed with the ASX 200. Just looking at, like, I think the overall trend is still up. If I had this stock, I'd continue holding it with a wide stop. But I'd want to know where my exit point is. Like, what we don't want to see is price continuing to get stuck below the moving averages, and then from there it does. That vulnerability can creep into it. So, not a stock I'd want to buy, but one I could continue holding with a wide trailing stop, assuming I was in it. I was in at lower levels. But yeah, it's one to be aware of the potential change in structure at the moment.
Okay, thank you. G'day, Kirby. Let's have a look at RDX. Could be forming a head and shoulders bottom on a weekly and setting up for a breakout.
What was the code again?
RDX.
RDX. So the weekly, it only goes back to, doesn't go back far enough really to use a weekly, for me at least. So I think we're calling like you can see like this consolidation period, calling that a shoulder. We're calling this a head, and I think we'd be calling that the right shoulder. So yeah, it's a possible head and shouldery type pattern. It actually shows up better on the daily chart, I think. There's our left shoulder, our right shoulder, and the head. For me, I'd probably more focused on the structure, which I like. It's like we've gone from below moving averages to above. We've consolidated sideways. The averages have crossed. The price is becoming more established above the moving averages. I think it's a chart with some merit. Probably I'd say like maybe if I was looking at this, we could just say, look, there's some resistance going on around that 296 area. Maybe it'd be a case of if it can like look at this recent rally off the November low. That's a strong rally there. If it can hold on to most of those gains, if we can see it hold on to those gains, maybe consolidate below the resistance, maybe it's a case of buying on the break. If we get a breakout, get a consolidation below, a breakout above, that could be an entry trigger, and then a stop loss could simply be just below the recent lows, maybe just back below the 100-day moving average. It's probably got some good risk reward on it. So yeah, certainly a stock worth watching it. If I was already holding it, yeah, I could continue holding this and have that stop back below the 100-day moving average. But yeah, certainly one worth keeping an eye on.
Okay, good one, Kirby. Let's have a look at SPD, please.
Was it SPD?
Yep, SP for Peter and D for Derek.
Yeah, this is an interesting one, particularly with what's going on with the palladium price at the moment. I like, yeah, I think I might have even had a look at this through the week. I was looking for local platinum or palladium stocks, and there's not much around. And this only I think it's a fairly small company. I can't remember what the market cap was, but it's not a large stock by any stretch. But I like the price action we're seeing in that we're getting the rallies, we're getting the consolidations into the moving averages, another rally, consolidation into the averages, and now it's trading well today. I think it's worth. I just quickly jump over to. Let's just quickly have a look. I'll show you what I mean by the palladium price. Um, so firstly, there's platinum. So platinum and palladium are they're sometimes mined together, and yeah. So we've had this move up in the platinum price and consolidation move up. It looks quite similar to the stock we're looking at, and then the same when you go over to palladium. You've got that same structure where you see it's rallying, pulling back, and like looking at the palladium charts, been bombed out for quite a while. Like, is this like a big rounding base, which is like now making its way higher? I think it could be. So yeah, I think this is worth considering. I think maybe this could be bought at current levels. Needs a bit of a stop. I think it's a higher risk situation. It's probably going to require a stop of like it probably needs at least. I think probably looking at least 25%. Needs 25 to say 30%, which is 25 I can work with. 30% starts getting a bit much, but yeah, it could be a high upside situation. It's yeah, definitely worth considering if you're up for a trade in a sector which is a bit tricky to find locally.
Okay, fantastic. Thank you. Hi, Roberto. Let's have a look at NMG.
Yeah, well, the trend remains strongly to the upside. It's a low price stock. It's a 4 cent stock. Yeah, look, if I had this, I'd be happy holding it. I'd be running my trailing stop. Back at like 2.5 cents or something, be back below the 100-day moving average. So I'm giving a lot of room to move, but I think that's necessary because you can see it has these, it does have these pullbacks to the moving averages. I don't want to have a close stop where the price could just come back to the moving averages, stop me out, and then rally again. I think I've got to have a stop below the 100-day moving average. Give it lots of room. See if it keeps running. It's been a nicely constructed uptrend so far with these rallies and into the moving averages, rallies and the consolidates, rallies, consolidates. Yeah, one to keep holding. A trickier one to buy now simply because, where do you put your stop? Like, you look at the current price and go, well, oh, look, maybe it needs, maybe 26, 27%. Probably at a minimum. It's and based on what I said about gold as well, and that, this is such a small stock, maybe it's going to largely do the same thing, depending on what they're are they finding something? Are they getting good drilling results? It's I think it's a highly speculative one to buy. But if I'm in at good levels, I'm in on one of these earlier breakouts. Yeah, I definitely want to be running it and seeing where it goes.
Fantastic, thank you. Hi, Astro. Yes, Mo's gone for December now. Back to fresh look. Let's look at wishes. Hi, wish. That's SRG. Thank you.
Oh, we looked at this one earlier. That was our stock.
We did. Yep, you're right. DMP then. This is the next one from Grandura.
It looks like there could be something coming together with Domino's. It's just a fraction early for me at the moment. Like, it's been a down and out stock for a long time. A lot of time below declining moving averages. A couple of false starts where it looked like maybe it was going to start recovering, but then went into another tailspin. Moving averages are just starting to cross. I'd like to see it become a little bit more established along the moving averages and break to a new high. So just setting a couple more hurdles up in front of it to see whether it can clear them. If we just got a little bit more time above the moving averages to come more established, and then from there we started to get a break higher. That's where I'd say, look, this is something I want to consider. At the moment, look, I'm always just mindful. Like, could it just be one of these, short bouts above the averages which come back down? It's been an underperformer for a long time, so that's why I want to give it a little bit more time. But it's if I'd already got in, fine. I'd be happy to stay in. I can have a stop loss back below the moving averages. Probably needs about, I think I'd want to be giving it probably at least 25% at current levels. But ideally, I'd wait and see. Can it become a little bit more established above those moving averages, and then buying into a breakout? That's where I think would start to put the odds more into our favour. Worth keeping a close eye on.
Okay, thank you. SMR is the next one, please, from James.
Yeah, interesting. It's just sort of oscillating either way of its moving averages at the moment. It's is it building a base from which it could start to rally from? It's entirely possible. I like that we've had a strong rally off the September low, and then we've had like a sideways consolidation around the moving averages. So maybe that's a sign that there's strong interest in buying, and now this sideways trading range which is developed is where the dip's being supported, and so it's holding on to those gains from September. Moving averages are starting to turn higher. I'd probably want to give it a little bit longer in terms of buying it, because we can say that's a bit of a range at the moment. Can it just kick clear of this range? Maybe look at it around 250. If we start to get a bit of a push through towards 250, then maybe we're buying it into some momentum. We've got the moving averages starting to rise. that would probably be the play. If I'd got in early and I already had it, well, I probably could have like a stop, maybe just back below the October, the late October low, which could be something like 20% away. Um, but yeah, look, there's good upside potential. Like if this is a basing phase, it could support quite a strong rally. Yeah, one of those stocks which is worth keeping an eye on for a breakout to the upside and a possible trade.
Okay, fantastic. Hi, Jules. Let's have a look at your first one. XRF, please.
I had this recently and I sold it when it was a time stop exit. I think I might have bought it when it was bought it in August as it was starting to break higher, and then then the and then in yeah, maybe it just reached my time s- time stop somewhere in mid-November. I think I probably sold it. So maybe I got in back in July or somewhere. Then I sold it because it was below my entry price. So I thought okay, look, I'll move it on. It was also below moving averages, which were rolling over, so I just shut that risk down. Um, that said, it's this over the overall trend has been up and does continue to be up. Need to be aware of the possible structural change going on at the moment. Does it get stuck beneath moving averages, which are crossing now? As we can see from back in early this year, stocks do have, and you can also see from October last year, stocks can have reasonably short periods of time below declining moving averages where they base and then they start to rally again. So just because a stock is below moving averages doesn't mean it's going to go into a downward trend. But what I don't want to see it's that price action where it just gets stuck and it can't really rally, and then that opens the possibility of that secondary breakdown occurring. So I'm watching for a rally that can't gain traction, and then prices starting to roll. That's the risk. That may not happen. Um, if I was in this from better levels, so I was in from lower prices, I'd be happy to give it the benefit of the doubt. I only sold because of my time exit. Um, Yeah, I probably wouldn't want to see much more weakness so below the November low. Below the November low, it starts to get a series of like lower lows in place. We don't want to see a series of lower lows developing. That's a sign that the rallies are being sold, the dips aren't being bought, and that's where we can start to move into a downward phase. So it's probably just like like an orange and amber flag at the moment. Keep an eye on it. There's risk whilst below those averages, but we don't have a breakdown at this point, and it could base like it has previously. Benefit of the doubt for now. Not a buy. Needs to be back above the moving averages for me to consider as a buy. But yeah. Let's see if it can get this foothold and get back above those averages.
All right, fantastic. Next one is MSB, please, from Katie.
Volatile stock, but it does have a potential. It does has the signs of an emerging trend. So we've got some rising lows. The moving averages are generally moving higher. Strong rally off the lows in the last week or so. So if it can hold on to the most recent rally and hold above the moving averages, it does set itself up for another attempt to push higher. Yeah, look, if I was holding this, I'd continue holding it. Um, know where my stop loss is though, so it's going to be below the somewhere below the November lows, back below the moving averages. It's not a nice clear cut trend like some of the other ones we've looked at, but it does have that general upward momentum at the moment, which I'd be happy to sit with. But it's a stock I very much want to know where my exits are because it has been prone to disappointments in the past, and you can see when it turns and things go bad, it can go bad for a while. Um, and it does have a tendency to have these upward moves that then don't continue. So yeah, I think it's one to be careful with. Um, yeah, know where your exits are. I think that's the most important thing. But we could give it the benefit of the doubt for the moment.
Okay, fantastic. Hi, Dennis. Let's have a look at MTH.
Yeah, this is disappointing. So it's a silver. Oh, well, look, I'm just going by the name, silver and gold. Whether they actually have silver, it's another matter. And whether they actually have gold, it could be just doing drilling, and they don't really have like a proven resource. I don't know. But at this point, it's like given the price action we're seeing in gold and silver, it's disappointing to see a stock which is trading below declining moving averages. I'd be inclined to not want to be in this stock. It looked like we had. I remember we looked at this a while ago, and like if we were looking at it just here, I'd be saying this is looking interesting. We're above the moving averages. We've consolidated into them. Now we're getting a breakout. This is I'd be saying, look, this is one I'd be keen to have a look at, have a stop loss back down the moving averages, all good. And we got an initial rally, but then it failed. And it started off with consolidation on the moving averages. That's okay, but then it's broken down below the averages. So if I'd bought on that breakout, my reason for owning the stock is no longer there. I'd probably be using this rally to exit. I just don't like the price action. If it happens to get back above the averages, reestablishes, well, I could look at it again. But for now, it's like why is this stock falling in the current environment? It's not the sort of price action you want to see. So I'd be taking, depending on where I got in, of course, I'd be taking a relatively small early loss and moving on. But look, everyone needs to do what they think is right for them because I don't know what's going to happen. For all I know, we come in next week and there's a takeover and it's trading up at 80 odd cents. So we don't know. We can't see what's going to happen in the future, but we can see the price action and it's not price action. It's not bullish price action in a sector which is currently bullish.
Okay, thank you. Hi, Aka. Let's have a look at MTM. Mentioned this last week, snapping the 50-day EMA. I'm still holding from this point. Thoughts at this point a week later?
What was the stock code?
MTM, sorry. M for Mary.
Yep. Yeah, well, this is exactly what I was saying earlier about like stocks can have these excursions below the moving averages and snap back. So just because something crosses below the averages doesn't mean it's all over. This is why I'm always talking about wide trailing stops. Yeah, look, this is great. It's now back above the moving averages. The key now is can it hold on to most of these recent gains? I think the best price action would be now we now get consolidation that holds onto those gains above the moving averages, and then it sets the potential for an ongoing rally. Yeah, look, I'd if I was holding it here and now, I'd continue doing so. I think the clear risk point now is below the lows from a week or two ago. If it were to about turn, about face, and quickly make its way back down, it'd be like I'd be saying, look, I don't want to be in this stock. It's it hasn't held its gains. It's making a new low. That's where I'd be saying, look, I just got to rule this one off. And if it comes good later, we can revisit it. But that of course, hasn't happened. That's what I'd be looking for to go wrong. But yeah, for now, benefit of the doubt and see whether it can do what we just discussed. Can it become re-established above those moving averages?
Okay, thank you. Next one, let's have a look at M7T.
Strong move here, isn't it? So I think, okay, moving averages are staying across. It's been a quick move from below to above. Often when we get that, we get a consolidation, we get a pause. and prices, you get some sort of a pullback, whether it be a trading range develops but some sort of a pullback is often the next step, and then it's a case of like, does the stock do a good job of holding onto its gains while the moving averages cross and start to catch up? So that would be the if someone happened to buy near the lows and they're up where we are now, great. I'd be hanging on. This is not a stock I'd currently be in because I would have been too early for me to have bought before this big lift. So I'd be now going, okay, I want to see the next pullback and see what the next consolidation looks like, and then assess it as a possible entry. But it's yeah, I like that it's breaking above some previous highs. Yeah, there's some good potential with it. It's now a case of like, how do you get on? Like, just cut steaming in today and buying it. I think the problem with doing that is, where do you put your stop? I want to be back below the moving averages, so it's about 35% away. It's a bit much for me, a 35% stop. Any lower, any higher, I think it's just too close, and you risk getting. You could say, look, I'm just going to put a stop below this low from a few days ago, but we could easily get a trading range develop like such, and then prices start to move higher after a bit of sideways. So you could easily just get chopped out if you have a stop too close. That's why I think it needs to be further away. But then, if it fails, I think it's probably taking on board too much risk. So I'd be waiting for the next pullback, see what it looks like, and possibly getting on board some sort of a breakout if that does develop. But an interesting one to keep an eye on.
Okay, thank you. Thanks for the compliments there, Akka, and hi, Earl. Hopefully you're feeling better. You're on your sick bed right now, so hopefully you're feeling better soon. There's a good comment in there which we'll finish off from Kirby, talking about evaluating trading systems. So we'll finish off with that at the end. But let's have a look at going to Hong Kong stock at 9927 as well.
Can't do much with this. There's just not enough price action. It's whether it's my trading view isn't loading at all. But yeah, there's not enough here for me to make any assessment whatsoever, unfortunately.
Fair enough. We'll have to go on the fundamentals for that one. Let's go. We're going to circle back with a couple of the seconds here since we've got a little bit more time. Let's have a look at Bob's HLI.
HOI?
HLI.
Consolidating sideways along moving averages. I'd be hanging in there if I owned this stock. It looks like we've got a bit of a trading range there. Coincides with the moving averages. It's we're talking about this exact situation with I can't remember. This was something else. We get this sideways along the moving averages. But yeah, look, that looks I'd be holding this with with a bullish bias that we could get a break to the top side. Give me 1 sec, Rog. I've got a battery warning light.
Another one? Yep, that's fine. Won't be long.
Okay, I'm back.
Ready to go?
And I won't suddenly and abruptly depart with a battery shutdown. So look, it looks like it's been a good rally. It's a consolidation. This is where you can consider like buying the dip. Like if someone likes this stock, saying, "Look, I like this, what they're doing. I want to buy the consolidation." There'd be nothing wrong with like buying at current levels, and then having a stop maybe 9% lower. So for the stop to trigger, it has to break to the downside from this range. And I think the incumbent trend is the path of least resistance, and the incumbent trend is up, although it has been somewhat volatile. I'd probably prefer to buy a breakout. I'd probably prefer to buy a break above the recent highs. But some people like to buy the dip. I think that I've got no problem with buying dips when they're dips back to rising moving averages. The dips I don't want to buy are dips where price breaks to the downside, and someone goes, "Oh, look, I'm going to pick this up at a bargain," because then they find their bargain quite often can become quite a bit more of a bargain. So I don't want to buy below declining moving averages, but I'm open to buying pullbacks to rising moving averages. They're the sort of dips I want to consider. So maybe that's the point now, or buying the breakout.
Okay, fantastic. One more from Jules, MAD.
I've got some of this one myself. I can't quite remember when I bought it. It's probably around break even for me at the moment. Maybe it was around August. Um, I'm happy to hold it for the time being. It's a fairly sharp pullback. I think the key will be can it find its footing around its November low and get itself back above the moving averages. I think that's what it needs to do to make it start looking like a corrective move. Like we could say, look, at the moment, maybe this is it's a zigzag pullback, and get a strong rally back above the averages and some consolidation. Then maybe you get a platform for higher levels. So I'm happy to. Like here's an example here. This is not dissimilar to what we currently have. There's your zigzag pullback to below the moving averages, back above the averages, and then there was a lengthy period of sideways. It's like something like that could occur again. And I don't know, but I'm happy to give this the benefit of the doubt for now. When my time stop comes up, if it hasn't moved along, I'll just move it out. But the broader trend is still up. The broader trend in this stock remains up. I don't think it's a buy at current levels, but I'm happy to hang in there for now. It's often it's a case of just being patient. Often we get times where, like, you look at this stock, like take this period for instance. It's like from March through to October, so 6 or so months of just sideways chop, and then the uptrend gets moving. So often it's a case of just having to be patient and sit with stocks, and then you can get the reward for the upward trend. Don't expect they're going to be going up every month. Expect you're going to have multi-month periods where there's just not a great deal going on, or there's some sideways drift or pullbacks. As long as the pullback doesn't get out of control and doesn't come back to where I think a stop loss probably should be initiated. For me at the moment, this would be a hold.
Okay, fantastic. SSM, another one from Grandior, Aura.
Yeah, I've got some of this. I've had it for ages. Don't remember where, but I've had it probably maybe somewhere in 23. So maybe a couple of years. And as I said, it's sometimes patience, just sitting through things. Lengthy multi-month of going sideways, another sideways period. Here's another one here during earlier this year. At the moment, here's another sideways pullbacks to the moving average. We've seen plenty of these pullbacks to the moving averages, like where the price gets up to higher levels, and then you just get like back to the averages and sideways. Is that what we're seeing now? Well, that's what I'd favour. I'd be looking at this as another pullback to the averages with the potential then to rally from there. So from that perspective, I'd be holding, and I am holding. I'm not looking to sell this stock unless it falls back to its calculated trailing stop. It's a motion trader stock, so there's a calculated trailing stop. I don't know offhand, but it's going to be back down, comfortably below current prices, and see whether after this sideways period prices go higher. Is it a buy the dip? Possibly. One strategy would be buying at current levels, just having a stop below the recent low, maybe 9%. and see whether that gets whether the trend re-engages. Look, I don't know that I'm super excited about that possibility, but I'm happy to stay in this trend and see where it continues to go. The reason I'm not super excited about buying it at current levels is because it's had a very clean trend for coming up to 3 years and has gone from 60 cents to $2.20. At some point, there will be a larger, deeper pullback. So I might just wonder whether it's getting a little bit late in the game to be getting interested in it. But I'm certainly happy to stay with it and see whether this trend can still surprise on the upside.
All right, fantastic. Let's finish up on CAT.
Well, I did have this one until about a week ago. This was a motion trader stock. It hit its stop loss. Last. Well, I think it might have been 2 weeks ago now. Hit its stop loss. I sold around that time, around $5, 30 something. I'm happy to be out. It was a great trend. I picked up a couple of 100% or so in it. Now we've gone big move from above the moving averages to below. Often when that happens, you get a rebound. We actually spoke about this in the Friday strategy session, and I think I suggested I'd be using a rebound to sell had I not already sold. And now we're getting the selling's coming back in. It's like, does this become a large downtrend, or does it just go into a lengthy period of just not doing anything of great interest, maybe continuing to drift off? It could still stage a miraculous discovery, but a miraculous recovery. But often when these big trends end with that momentum being severed so sharply, it does. I think there's a fair possibility it just doesn't re-engage in that upward momentum anytime soon. Like, my biggest concern when these big trends end is that I don't want to get stuck. I don't want to be stuck in this situation where, and this is a stock which I did have. It was a motion trader stock. Lark to ceiling, great uptrend. When the trend ended, look, the whole thing unraveled. It went back below its entry point. Here's the entry point somewhere over here at around. I think my entry point was actually $1. I actually remember it was $1. I remember it because it was like a standout trade and it was an even entry point. I'm pretty sure it was $1. It's now trading at 65 cents. So who wants to go from $1 to 568 or thereabouts, and then do the round trip back to $1, then down to 65? And people do it because some people struggle because they sell their good stocks too early. Others struggle because they get a good stock, they become loyal to it, and they don't want to sell it, or then they reason that it's too late to sell once the decline is really underway, and they hold on all the way down. It does happen. So this is why I think we've got to have those exit strategies. And this isn't a one-off. I could give you other examples as well, but we won't go on and on about it. I'm not suggesting CAT is going to do the same thing. Really, I'm not suggesting that in the slightest, but I am suggesting that's always a possibility, and I want to avoid that possibility. And the only way I can avoid it is by having an exit point. So if it goes back up after I sell it, well, so be it. That will happen at times. But if I'm disciplined on my exits, I'm going to avoid the heartache of holding something that goes all the way back to the bottom. Again, I'm not suggesting that's going to happen here, but it can happen. And I just want to avoid that at all costs. I think have that exit strategy and stick to it. The uptrend has been severed. I think there's now more risk than reward through holding a stock which is below declining moving averages after a big run.
All right, fantastic. I think we'll end it there with the stocks. We've gone through pretty much everyone's, and we've done some great discussion today, Jace, as well around time stops. So hopefully, if you need some help with that, definitely go and check out Jason's resources at his motiontrade.com.au website. There is obviously there's a great little calculation in there by Kirby. So thanks for giving us that the expectancy. Now that I've collected 2 years of data, and I would suggest everyone does collect their data. That's something that I haven't been that good in the past, but over 2 years I've collected all this data around my wins and losses and how much and whatnot. So I could go and do that calculation relatively easy now. So it's actually making me excited to go do it. So thanks, Kirby. You could probably see that there, Jason. You've probably got all that calculated around the expectancy calculation. Have you seen that at all?
Yeah. Like that's all part of in my system software, which I use for Motion Trader and my own portfolio, like all that win rates and average wins and losses and profit factor and all that. It's all calculated. It's all what you want to see. You want to see that you're when you win, you're winning well, and when you lose, you're not losing too much, as we discussed earlier. And that's all the stuff which you kind of get from that data.
Yeah, from the data. So yeah, definitely record as much data as you can about your trades, I think is the point there. All right, I think it's been a great show. Thanks again, Jace, for your time this week. Don't forget to check, if you're not a Selfwealth client, don't forget to check out the links below. And if you haven't tried out Jason's service, then you've got the link below as well. Otherwise, yeah, thanks again, everyone. Don't forget to leave a comment, subscribe, and all that sort of stuff as well. We will see you again next week, Jace.
Yeah, will do. Thanks, Rog. Thanks, viewers, for coming and joining us for another show. Love going through all those charts. That was interesting as always. And hopefully a few ideas in there.
Yeah, and appreciate everyone else's time on the other side.